Good morning, everyone. It's Dan Basse and Ben Buckner with Ag Resource Company in Chicago. It's Thursday, June 5th. We've got markets more or less little change kind of everywhere, including financial markets. And that's been kind of the theme of the week. Not much happening. Trade deals, weather, of course, still the focus. And as of now, we are just pennies different from where we ended last Friday. And so it seems like leverage on both sides, the Bulls and the Bears, kind of everyone's struggling for new direction. And we are getting into, of course, the summer weather market. What does the 8 to 15 day forecast say every day? I think has been a driving factor. But at Ag Resource, we kind of dug real deep into climate patterns, what June weather means for summer, climates, and we don't see a huge threat in the end. Though I think the market every day will have to assess risk as it always does during the summer. The day in export sales, weather, trade deals. Is there anything new from your end that you're seeing?
Well, Ben, as we look at the week, you're right. We haven't done a lot. We do get a U.S. employment report tomorrow, which would be rather important to the grain markets to see when interest rates will come down or if there'll be any changes at all. We'll see how that all falls out. So that's kind of an important data point. But to your idea of choppiness, boy, it's been everywhere this week. And that's why we kind of warn people on Monday not sell breaks, but wait for rallies, and our mindset is still there. As you look at sales this morning, notice the net cancellations on wheat. That's not unusual. Only white wheat did we sell last week. And the U.S., the export sales pace is probably good enough to give us where the USDA is on an annual basis for wheat. Next year, we're going to come into the crop year, it's somewhere around 220 to 230 million bushels. Corn sales were mediocre at best, 37 million bushels on old crop. Soybean sales not good at 7 million bushels. And so we're starting to slow seasonally on U.S. demand. Now, whether this is related to trade or just seasonal trends is yet to be debated. But in the background, I still hear lots of troubles between the United States and China in terms of pushing any kind of deal forward. As we think then, if we are not seeing much on the trade side of things, let's think a little longer term. We put this graph together. This is corn, wheat, and soybean world trade, global major exporters looking backwards to 1990. Now, we're expecting, because of the tariffs and what's happening in the world and the geopolitics of the duopoly that's developing. By duopoly, I'm saying Beijing and Washington, D.C., we kind of look for world stagnation in terms of grain demand. So trade is going to go sideways. I think actually USDA is a little too high on its corn and wheat trade for the upcoming year, and we will look at to be very close to last year. So if we don't have a demand driver in terms of global grain trade or demand, that means we need to look domestically at the biofuels industry if we're going to see any support for these markets longer term. And as we've said before in this broadcast, we're not sure if biofuels in the United States are part of Trump's homegrown energy solution or part of the big green lie. I guess we'll find out about that as we go forward in terms of the Senate bill and what the EPA will be doing going forward. As we look at the other issues that we think is going to emanate as we come in the next quarter or two, it's really that the EU has got EU and Black Sea combined has got a larger wheat crop, 86 million metric tons, up 14 million from the year prior. And then as we look at world corn production, US, Brazil, Argentina, Ukraine, it looks like it's going to be record large. A lot of that due to the record large Brazilian crop that may be as high as 140 million tons. So competition for world trade is going to be rather robust. In fact, today, Argentina offering corn for August, September is about 20 cents a bushel underneath the U.S. Gulf. This is why the U.S. corn export pace will slow into the end of the year. And then Brazil corn either at parity or slightly below the U.S., although a fist fight for world wheat and corn demand going forward. And if we don't have China because of a trade deal, it even becomes a little more arduous. As you look at the weather forecast, here's the AT 14-day in terms of temperature and precipitation. You see a lot of green on that precip map. Temperatures being near to above normal would favor crops that are struggling with GDDs. So this is kind of a greenhouse growing forecast, if you will. Dryness across places like maybe Indiana and Ohio are welcome. So as you think about heading into the end of June, weather looks really relatively good with a progressive pattern that doesn't show any stagnation or any locking high pressure ridge across the central U.S. In fact, as we look at the extended range, I went this morning and pulled the EU long-term range so you can look at the 30-day temperature and rainfall profiles. Notice that up until July 6th, the models are not suggesting a lot of heat. If there is any heat, it's going to be in the western U.S. If there is any dryness, it'll be Nebraska, Iowa, maybe some of the Dakotas. But I would mention that the models have been too dry in that area recently. Those crops have received some rain and are doing relatively well right now. So, Ben, I would look at the markets saying that on Monday we said, let's not sell them. But I believe that as we look forward here, I think that you're going to find out that indeed, if we get any additional rally, maybe towards the 50-day moving average in corn at 448, which is only up a couple of cents, I think that's areas I'd be looking at making some additional sales, probably looking at 550 or above July wheat, making some sales, and soybeans. It's all about biofuels, and we're still waiting for politics to play out in that. Back to you, Ben.
Yeah, those are all very much unknowable. And I think, at Ag Resource, we're always kind of top down, big picture first. And so middle of June, it's always time to start thinking about risks. And that's what we're doing. Again, $1 gets you in for 30 days. And we're doing a lot of work on, providing the framework for what happens over the next 6 months. I think it's important to think about, corn export sales. And the reason they have been so good, and it's pretty simple to us, it was having lost a lot of Black Sea production last year and having a pretty small Brazilian crop last year. So if those things are resolved, we kind of revert back to normal in terms of demand. And so the debate really is, does U.S. corn yield fall to a level that gives us supply tightness? And looking at weather, I don't think that risk is intact today. So again, our focus is, as the market's debating weather forecasts, yield issues every day, it's important to think about the big picture, supply and demand globally. What does supply look like, on the world stage come October 15th? So that's kind of where our heads are at. So yeah, I think that's all really good information. It is not unusual to have periodic spikes in value because of weather during this part of the calendar year, but also, what do you do with those? And that's, I think, what we're going to be laying out. So yeah, unless you got any final words, we'll kind of close out here and all the best in the markets today.
No, Ben, you took the words out of my mouth. It's what to do with those rallies, and that'll be key, and you'll see it within our report. I think there's opportunities here for producers and traders. You just got to be afoot and understand what the market's doing. Have a good day, everyone. Ben and I will be back tomorrow.
Okay, bye.